income tax compliances for the financial year 21-22. So here we would be knowing in details about all about income tax compliances, the due dates, which ITR is required to what kind of individual, is it beneficial to file the ITR or not, and what are the different types of ITRs, why the government have introduced these different type of ITRs, and what are the documents required to file the income tax returns, and various other questions. So we'll be starting one by one about all these topics in details. So firstly, let me tell you what is the due date for filing of income tax return. So the due date for filing of income tax return for the financial year 21-22 is 31st of July 2022. So this is the current assessment year, which is assessment year 22-23. So in the assessment year, we file for the income earned during the financial year, which is 21-22. So now, who should file the ITR, and what are the benefits of filing ITR on time? So I think you all have been filing your income tax returns since long, and for those who are new to income tax filing, so it will be really beneficial for you to understand all the basics about these filings. So anyone who is having income exceeding rupees 2.5 lakhs in the financial year, then it is mandatory for you as per the income tax provisions to file the income tax return. Now, income tax return, there are many other conditions when income tax return is required to be filed mandatorily, even if you are not crossing the threshold limit of income. Now, what are these income? What are these threshold limits? We should understand this in detail. So if you have any TDS deducted, any tax deducted by anyone who is giving you any type of income, whether it is bank who is giving you interest income on your savings deposits, fixed deposits, or recurring deposits, if you have income received from like any other this thing, bank deposits or post office deposits, PPF, even your interest on PPF is your income. You should declare that. If it is exempt, you have to declare that as an exempt income. So there are certain conditions when it is made mandatory. So whenever you have any TDS amount which is more than 25,000 rupees in a financial year, then the income tax department asks you to file your income tax return mandatorily. If you have, if you are going to apply for a visa, if you want to travel abroad, or if you have a foreign travel expenditure of rupees 2 lakh or more, or if you have electricity bill for the entire year which you have paid for more than rupees 1 lakh, and if you have any salary income, if you have any deposits, savings bank deposits of rupees 50 lakhs or more, or current account deposits of rupees 1 crore or more. So these are such conditions where even if you do not have income, like the definition of income, what we say as per Income Tax Act, even if you do not have income, if you are falling in these conditions, you have to file your ITR mandatorily. So now we will understand what are the different types of ITR forms which are available to file by the individuals. We are only discussing about the individuals. There are other ITR forms which are not applicable to individuals. So we will be only confined to the individual return filings. So starting with, there are basically 4 type of ITR forms for individuals, starting with ITR 1, which is a basic and simple ITR form. This individuals who are resident, who are staying more than 182 days in India in the previous financial year, and various other conditions which determine that they are residents. So these residents, if they have income of less than rupees 50 lakhs, or if they have income from only one house property, or if they have income from only deposits like interest income, savings interest income, fixed deposit income, any interest income, or any dividend income, they can file ITR 1. So it is a very simple ITR where you need not to just hustle about various type of disclosures. Very simple return. You can just simply file the ITR and you can claim whatever deductions you are eligible to. You can claim all type of deductions in ITR 1. Going forward, if you have traded in the previous financial year, if you have invested in stocks and if you have sold them, so if you have any kind of capital gain income, so we are just talking about capital gain income, which is from buying and selling of property, buying and selling of debentures, mutual funds, shares. So if it is a long term or short term capital gain income, then you can file ITR 2. In that case, ITR 1 will not be applicable to you. Okay, so any condition which does not fall in ITR 1, for that you have to go to ITR 2, including that if you have any capital gain income, you have to file ITR 2, ITR 1 will not be applicable to you. So now if you see what are these conditions again which are not covered in ITR 1, which is if your income is more than 50 lakhs, if you have income from more than one house property, or if you have income from other sources apart from interest income and dividend income only, or if you have capital gain income. There are certain other conditions when ITR 2 becomes applicable to you and not ITR 1. So these conditions are, if you want to carry forward any of your losses, then ITR 2 you have to file. If you are a director in any company or in LLP, you have to report your DIN number and the details of those companies and LLPs in your ITR 2. If you are having any unlisted shares, if you are holding any unlisted shares, okay, so for that you also have to file ITR 2. ITR 1 will not be applicable. So now the question arises, I have been allotted ESOPs from my company, or I have some RSUs from company, so do I need to declare those or not? So according to the act, yes, you have to declare these RSUs and these ESOPs under unlisted shares. If you have any foreign RSUs, then you have to also declare that in scheduled foreign assets. So these disclosures are mandatory. Going forward, about ITR 3. So ITR 3 has one additional income source which is not covered in ITR 1 and 2, which is income from business and profession. So if you have any income from business or profession over and above salary income or over and above capital gain income, then ITR 1 and 2 will not be applicable to you. You have to go to ITR 3. Now, this business income may be from trading of shares, like you have not held the share for a certain period of time, but you have bought and sold the same day, what we call as intraday. So it is a speculative income. Or if you are dealing in futures and options, in these cases this is a business income and not capital income. So you have to file ITR 3 because it is categorized as business income. Okay, so only addition in ITR 3 is business income. Now business may be anything. If you have any small shop running, or if you have any kind of business is what you have. Apart from that, if you are a professional, if you are giving consultancy services, if you are doing freelancing business, and you also have capital gain income, in that case you have to file ITR 3. Now we come to ITR 4. So ITR 4 is a different kind of form. So for those people who do not have a capital gain income, but they are providing either freelancing services or any kind of professional services, and if they have business income which is not exceeding a certain limit, then they can opt for presumptive income tax filing. They can opt for presumptive scheme and they can report their income accordingly. Now we will understand what is this presumptive scheme. So if you have a business income where the gross turnover is not exceeding rupees 2 crore, so if your business income, your gross turnover is not exceeding rupees 2 crores, then you have a liberty to not maintain your books of accounts, and you can simply file the presumptive taxation scheme, your ITR under presumptive taxation scheme. You have to declare a minimum of 8% of profit if your inflows and outflows are in cash, or 6% of profit if your inflows and outflows are in through banking channels, means through non-cash channels. Then you can utilize this benefit for business. Now for profession, if your turnover, your gross turnover is up to rupees 50 lakhs, then you can opt for this option, and you have to disclose a minimum of 50% of the profit of that gross turnover. So just if I give you an example for business, so say for example, if you have a 1 crore of turnover, at least and you have all the transactions through banking channel, in that case you can simply show 6% of income, which is rupees 6 lakhs out of that 1 crore, and you can file your return. So this is a very simple return. Now Now the question may come that I have a business, I have turnover of rupees 1 crore only, but I have certain capital gain transactions. But I want to opt for presumptive filing also. Which return is applicable to me? In that case, ITR 3 will be applicable to you. All right. So in that case, you have to disclose your capital gain income because it is not available in ITR 4. So ITR 3 has to be filed, and under the income from business and profession, you can offer presumptive filing under 4480 and you can report in ITR 3. So ITR 4 is only and only when you have salary income and this business income, business or professional income, and you do not have any capital gain income. All right. So these are different types of ITR forms which are available. So I think I was able to explain you what ITR is applicable to whom. Now, when you are opting for filing your income tax return through Cleartax, you just need to disclose your income under respective head. The software will choose which ITR is applicable for you, which ITR is best applicable for you. So you don't have to like utilize your time in understanding that ITR 2 is good for me or ITR 4 is good for me. So the software will do it for you in no time. Going forward, now what documents are required for filing of ITR? So please keep in mind that there are three basic documents where most of the details of your income will be available. So what are these three documents? Now, first document, I think you all are all aware about all these documents, but still I want to give this information to those people who have never seen this such document or who are new to filing the income tax return. So firstly is Form 16. Form 16 is an income document which is issued to you by your employer. So your company will be issuing you Form 16 where the income from salary details will be available. The employer in the entire year, they ask you to submit the declarations. So all these declarations, if they are eligible for exemption, those will be already considered in your Form 16. So this Form 16 is actually a summary of your salary income, including all the deductions, what you are eligible for. Second document is Form 26AS. I think you all are aware about it. You can get this document from the income tax portal, or you can just log into your internet banking and there you can get this document. So that internet banking portal will take you to income tax portal directly and you can get this document. Now, what is this document? Form 26AS is a summary of all the income given by all the persons who have reported your income to the income tax department by filing the return of TDS. Okay, so if they have deducted any kind of tax from your income before giving it to you, they have to report in like to the income tax department through TDS returns, and that will be reflected in Form 26AS. So you will see that apart from your salary income, which is available in Form 16, certain bank will be reporting the fixed deposit interest income, because even if they are deducting the taxes or not, they have to report in Form 26AS. So you have to check and just be sure that that is the interest which is covered by the bank. So you can also download the interest certificate from the banking portal also to cross verify. Please make sure that income reported in Form 16, okay, that matches with the income reported in Form 26AS. So the gross income before any deductions, these should match from Form 16 and Form 26AS. Now, if there is a difference, if Form 16 is reporting excess income, you need not to worry, because the employer is saying that whatever income has been reported to a department, I am giving you more income, and now you have to pay taxes according to the new income. But if the income reported in Form 16 is less than income reported in Form 26AS, in that case you have to go and check with your employer, because then it will be an issue. All right. So please make sure that you are checking Form 16 and Form 26AS, that both the gross incomes are at par. Moving on, there was one new document which was introduced in the previous years, which was annual information statement. Now, what is this annual information statement? This is actually, you can say the upgraded version of Form 26AS. Here, you will be getting the report of all the SFT transactions. If you have sold any shares, if you have sold any mutual fund, even if you have bought any shares, bought any time deposits, all these information will be available in your AIS. Even if you have received any dividend income from any company, this will be reported. If there is any interest income which has not been considered for TDS, even that interest income will be available in form AIS. So please make sure that before filing your income tax return, your AIS document is ready with you and you have confirmed that all the income reported in AIS that is taken in your income tax return. Moving ahead, there are various other documents which are required to file the income tax returns. So we'll just cover these quickly. Bank statements, passbook, just to calculate the interest income. Say, for example, there are certain amount received from someone, which it is actually an income, but these have not been reported because they were not required to do these compliances. Please make sure that if such amount received is income to you, that you are, then you have to report that in your income tax return, maybe in any sources which is classified. If it is a house rental income, or if it is an other source income, please specify that. Apart from that, if you have any interest income from fixed deposits, you can have your interest certificate from the banks, that will be available. Also, it will be available in your form AIS and 26AS. You can have a check with that. TDS certificates, I think we have already covered this. One more important document is home loan interest certificate. I think when you give a declaration to your employer, you submit this home loan interest certificate to them so that they can consider the interest paid by you for home loan, or the principal component paid by you towards the home loan. That is already adjusted in your form 16. But make sure that whatever amount the employer have reported, that is matching the home loan interest certificate. So just make sure that cross verification you are doing before filing the return, so that tomorrow you don't have to face any issues. Now, in certain cases, the house is owned by husband and wife, like both the spouses are like the co-owners of the house. Both are working and both want to claim the interest and the principal component. So please make sure that it is split even. If the holding is 50%, so it has to be split even, and you are only claiming your portion. You are not claiming the entire amount, and the other spouse is not claiming the entire amount. Because if that is the case, going forward, income tax officer may catch you for this. Okay, so just make sure that everything is in line. Then other documents are proof of deductions if you want to have any claim. Just for example, if you have paid for medical insurances, or if you have if you have any education loan, and then you have the interest certificate on that education loan. Apart from that, if you have given any donation, so all these proof of deductions which are eligible as deductions, okay, that is available with you before filing the return. Apart from that, I think you already know that when you trade the shares, or when you invest into shares and you sell these shares. So when you are selling the shares in the financial year, then we calculate the capital gain loss or capital gains. I mean capital gains or capital loss. So the capital gain statement will be provided by the broker. So please make sure that these statements are available with you. So if you are trading from Zerodha, you can download the tax P&L statement, tax profit and loss statement, because there they will be calculating if the share is long term or short term, or if it is bought before 31st of January 2018, then the grandfathering has been done. So these are some technical things. I think you all be knowing it. But if you face any issues, Cleartax is always available to help you. So please make sure that the capital gain statements is available with you. Moving ahead, so there are various options where you can save your taxes. So I'll quickly cover all these options, and I think most of you would have already submitted proof for these expenditures to your employer, so that they can just adjust all this income, and they would have already issued you form 16. So, but going forward in the current financial year, if you want to plan, if you want to save taxes, you can just see all these options, and you can just take note of it, so that tomorrow you don't have to just struggle paying extra taxes. If you have the limit available to utilize the different sections of deductions, please make sure that you are investing properly and saving maximum taxes possible. So what are these? I think you already know about the employer provident fund. We also have a public provident fund. So the entire limit for section 80C is rupees 1,50,000. So all these are covered under section 80C. All right. So please make sure that your ATC is covered up to rupees 1,50,000. You can invest in public provident fund if you have not already invested in EPF. Even if you have EPF, you can, if you wish to invest in PPF, you can always do that. You can just go to any nationalized bank and open a PPF account. If you have any children, you can pay for their tuition fees and you can claim that deduction under Section 80C. If you have paid for any life insurance policies, or if you have, if you have any policies in the name of your spouse or children, you can always claim that. If you have taken home on loan, then the principal component of that home loan can be claimed under Section 80C. So these are the the options where you can just utilize the limit of 1,50,000 under Section 80C. Apart from that, we have different other sections where you can invest in national pension scheme. So there are a few options of national pension scheme from employer or employee. So the limit is already specified. You can invest that. You can check with your employer if that option is available in your company or not. You can just opt for that option. Over and above that, you can always go on your own and you can open an NPS account and you can take the benefit of up to rupees 50,000 under ATCCD 1B. So this is for the national pension scheme. They have a lock-in period. So please make sure that you have planned whether you want to keep the money locked in for that amount, for that period of time or not. So one thing we missed to cover in Section 80C was investment in tax saver fixed deposit and equity linked saving schemes. So you can always use that option if you are not willing to invest in LIC policies or any other options. So you can utilize those options, ELSS and for tax saver fixed deposit. Going forward, so we will just understand quickly what are the different regimes available to us. So in the previous years, the government has launched a different slab rate, okay, of the different tax rate applicable on different slab of income. So earlier, I think you already know if you were filing the income tax return. So there was a regime where up to rupees 2.5 lakhs, your income was exempt and there was no tax on that. Beyond that, beyond 2.5 lakh, up to rupees 5 lakh, you had to pay a 5% of income tax. Beyond rupees 5 lakhs up to rupees 10 lakhs, you had to pay 20% of tax, and beyond rupees 10 lakhs, you had to pay 30% in the entire income, whatever was available. Over and above this, you had to pay a cess, a health and education cess of 4%. Now, in the previous years, the government have issued this new regime of income tax. So it was actually helpful to those people who do not have any good amount of deductions or exemptions available. So for them, if you are if you have income but you do not have much of deductions, or if you have income at a higher slab rate, you can opt for a new regime if it is beneficial to you. You can understand like how it works. So up to rupees 2.5 lakh, there is no tax, just like old regime. Beyond that, every increase of 2.5 lakh of income will be charged with a 5% increase of tax. Okay, so if you can see in the example, with every increase of 2.5 lakhs, so first 2.5 lakhs is exempt, next 2.5 lakhs is taxed at 5%, thereafter it is taxed at 10%, and so on up to rupees 15 lakh. Beyond 15 lakh, the tax rate is 30% as the just like the old regime. So beyond 15 lakh, it is 30%. In the old regime, it was 10%. It was 10 lakhs, and in the new regime is 15 lakhs. The health and education cess is just like same, just like the old regime, because that is a separate tax altogether. And if your income is more than 50 lakhs or more than 1 crore, then you have different rates of surcharge applicable on you. All right. So you can always check that which regime is beneficial to you. I'm sure your employer would be giving you that option in your HR or payroll portal. You can just check which regime you have opted, and also while filing, you can just check whether you are saving more taxes in old regime or new regime, and accordingly you should choose. So for individuals having only salary income or interest income, they can choose between old or new regime anytime, for any amount of years. But once you have categorized yourself as a business person or a professional person, if you're filing ITR 4 or ITR 3, in that case, you can only switch back once. So you can switch from old to new, and you can come back only once. So you cannot do it for all the years. Please make sure that you are taking a wise decision. If you want to understand more on this, so we can just understand this with an example. Like say for example, if your income is at rupees 7.5 lakhs. So I think you already know, under the salary income, you have a deduction, the standard deduction. Sorry. So beyond that standard deduction, you need to have at least 75,000 of additional deduction to opt for old regime. Otherwise, new regime is better for you. Just like this example, you can go ahead and see for 10 lakhs, you have to have additional 1,37,500 of deductions and so on. Okay, so just make sure that if you're able to cover this amount of deduction, then you are opting for old regime. Otherwise, new regime is better for you. Going forward, this is a small example where it shows that if your income from salary is rupees 10 lakhs, you are given a standard deduction of 50,000 rupees. Now your gross total income is rupees 9,50,000. Now how much of how much of deduction you should be having to just know to compare between the old and new regimes. So if you are having a deduction of up to 1,37,500, in that case both regimes will be having same amount of tax. But if you have more deductions beyond 1,35,000, obviously old regime is better for you. And if you are not able to complete this amount of deductions, which is 1,37,500, then you should obviously go for new regime. All right, I think this is it was helpful to you understand how the new regime works. Is it beneficial for me to opt or not? And how many times can I opt the regime? Going forward, so you can use this software of Cleartax. You can file the returns without much of manual work. And if you have this Form 16 already available with you, you can quickly upload your Form 16. So once you log into the Cleartax, you can upload your Form 16 Part B, mostly Part B, because that will have entire amount of entire details of your breakups of salary and your other deductions. So you're uploading the Part B of your Form 16. Then it will ask you that whether you have changed the jobs or not, because if they see that for the entire 12 months if the salary is not paid, the software will automatically ask you if you have changed jobs. You can upload the Form 16 from the previous employer as well, or if you have uploaded from the previous employer, now you can upload for the later employer. So all the details from your Form 16 will be parsed accordingly in the respective fields. Right, and then you have to enter basic details like your name, your father's name, your date of birth, your PAN number and addresses. Then you have to enter your bank account details. You have to enter Aadhaar details. So these are mandatory basic details which is required to file the income tax return. So once you see that your Form 16 is uploaded properly, just open the Form 16 and just cross verify whether every amount has been reflected in the proper field or not. So I'm sure it will be done accordingly, but just to cross verify so that it any error, because if there's a character error or something or some other technical error, that should be avoided. So you can just change that and you can go ahead. Then you can go for income from other sources if you have. Otherwise, you can just simply shift to deductions, and you can see that whatever deductions is reported in Form 16, that has been taken care of. Now, if the employer missed to give you benefit of any deduction, you can manually enter this in the software. Okay, so say for example, if you have invested up to rupees 1,20,000 in PF and in LIC policies, and you have submitted the document to the employer, they have taken the benefit of rupees 1,20,000, but you missed to submit the children education fees of rupees 50,000. So here you are eligible to claim up to rupees 30,000 more to cover that limit of 1,50,000. So in your Form 16, the ATC will be showing as 1,20,000. Now you can go and correct this up to rupees 1,50,000 because you had incurred expenditure of children education fees. So this option will be available even after your employer has deducted the taxes for you, and if you are eligible, you can get the refund. Please make sure that your savings interest is also reported in your income tax return. So if you are not a senior citizen, then up to rupees 10,000 can be claimed as a deduction under Section 80TTA. If you are a senior citizen, then in Section 80TTB, you can claim up to 50,000 of exemption. This for like non-senior citizen, only savings interest will be exempt, but for senior citizens, savings interest plus FD interest plus other interest from recurring deposits, your post office deposits, all that will be eligible. So up to 50,000 for senior citizens under 80DTB. Please make sure that you are claiming these applicable deductions. You're not missing out on these points. So if you enter the savings interest in the income from other sources, our software will automatically give you the benefit up to the eligible limit. All right. Going forward, you can upload your Form 26AS also in the portal. So if you have if you have Form 26AS and apart from your salary income, if you have any other income which is reported in your Form 26AS, you can upload the Form 26AS and the income will go in the respective field. You just need to cross verify. And if you are liable to pay any taxes, like say for example, if you have a house property which was not declared to the employer, now you have to report the rental income if any. So that would be taxed at a set amount of slab rate, and then you have to pay some taxes. So once you have paid the self-assessment tax, do not forget to enter that detail in this self-assessment or advanced tax column. Because if you have paid the taxes but the detail are not available, the department is what I've already told you. The Aadhaar number or the bank account details you have to enter, because that is a mandatory field to file the income tax return. Now you can quickly go to the last tab and you can see whether if you have any tax liability or any refund. Okay, so if you have paid extra tax apart from what you had to pay, so in that case you will have a refund. But if you have paid less of tax, then the software will tell you that you have this amount of tax payable. You can download the detailed report. Okay, so this is actually a computation. You can download the detailed report and there you can cross verify if you have missed any report any income. So please make sure that all is being reported and properly entered in the ITR in the proper fields, and then you can see how much refund or how much tax liability you have. If you have a refund, you need not to worry, just go and file your return. But if you have a tax payable, make sure you are making the payment first and then filing the return. You're making the payment, entering the payment detail and then filing the return. Okay, so here while filing the return, it should be either you have a refund or it should be that you have no taxes due. Do not file the return if it says that you have a tax liability of such and such amount. Okay, so this was all about the basics about income tax returns. What are the ITR forms? What exemptions and deductions are available to us? What is the due date for filing of ITR? Please do not wait until the last day, which is 31st of July. Please file your ITRs. Take your time. Sit for at least 1 or 2 hours. Collect all your documents and file the return as soon as possible. Do not delay to file the income tax returns, because we all know that if we delay, if we keep on delaying, then if we have a tax liability, we might have to arrange the money to pay the taxes. So that may get delayed a lot and we might miss the due date. Please make sure that we are filing on time. And also one important information, if we are missing on the due dates, so after a certain period, the government will still allow you some time to file the belated return, but after a certain period, there may be a penalty of up to rupees 10,000. So we should not be paying that penalty in any case and file the return on time. If you want any assisted services, you can always contact to Cleartax. So the email would be mentioned in the chat box, and I'm open for questions. If you have any questions, please let me know. I'm sure most of your questions would already have been taken care by Mr. Sekat, and he would have been answering all the questions. So apart from that, if you have any specific question, you can ask me. Fine. I think it was really great to share the inputs with you all, and I think you would have been finding this beneficial to you. So please go ahead, file your returns, and just make sure that you are not paying any additional amount of taxes. And going forward, you can plan your taxes accordingly. I think this webinar would have been helpful to you, and thank you all for joining this webinar.